Welcome to the REI Agent, a holistic approach to life through real estate. I'm Mattias, an agent and investor.
And I'm Erica, a licensed therapist.
Join us as we interview guests that also strive to live bold and fulfilled lives through business and real estate investing.
Tune in every week for interviews with real estate agents and investors.
Ready to level up?
Let's do it.
Welcome back to the REI Agent. Mattias here. There's been a lull in recordings, and that won't be apparent for you because we post consistently, but I haven't recorded anything for like a good almost 2 weeks, probably. So hopefully we're not rusty here, or maybe I'm more enthused and ready to go and talk too much. But in that time, we went camping at a state park, which was a lot of fun. We typically enjoy the camping life. It could be tough at times for sure, but we try to get out and get the kids some, different unique experiences. And camping has been something we've done, 3 to 4 times or so a year on average, I would say. A lot more during COVID for sure. And then also Erica went to visit her nephew, went to Kansas to her parents' house, and her nephew was there. So she got to meet her nephew, and she really enjoyed it. That meant she was gone for about a week, and I was home alone with the kids. And that is a challenge for sure. We talk about this pretty openly. Like when we got married, we never had the intent of having kind of a more traditional household. It was never kind of something that I was seeking or she was seeking. But definitely as, my real estate career and kind of my personality type and stuff has evolved. I've definitely been probably more 70% of the work in the house, like income earning work, where Erica has been more heavily involved, maybe 70% of the household stuff, even though she still works and I still help around the house. So that transition though, from, her being 70% in charge of the household, to me being 100% in charge of the household is a bit of a shift. Figuring out what the kids are going to eat for lunch, have to pack the lunches, all that kind of good stuff is definitely can be a challenge. But we got through it, and, I can tell that I have a better relationship with the kids for it. It's, it's good to do that. I had been working to have a quarterly visit trip with the kids, probably the oldest ones right now, that we would go somewhere and kind of spend a weekend or, at least a night together without Erica, just to kind of keep building that bond. And, that hasn't happened for a little bit, but this is definitely a very bonding experience for us. So we did have a lot of fun. Today we have Joe Killinger out of LA, a commercial agent into investing as well. He was a great person to talk to. He dabbled in residential sales as well a little bit. We talk a little bit about the differences between the two and maybe where somebody might gravitate towards if they're getting started in their career. But yeah, it was a great conversation, and we kept kind of coming back to the learning the new things. Learning real estate as a whole is so important. Even if you are only looking to learn about the commercial side more to be an investor, there's a lot of value there. And that's, one of the big purposes of the show. I think it's trying to get a more holistic picture of real estate. If you're just a residential agent, there may be a lot of things that you're not familiar with on the investing or the commercial side of things, but it is such a great opportunity for us. We talk a little bit about the 100% bonus depreciation coming back and how that can be a huge game changer for agents. He talks about starting a fund for his agents that is kind of like a 401k. This is, think about if you're investing in a 401k, you're putting your stocks, maybe you're buying index funds maybe, or you're buying stocks, and how much do you really understand about those industries that you're actually investing in, as opposed to, they are actually investing in commercial properties, and there's a fund of their agents that are buying into this to help make the deal go, and they get a return based on it. Not only do they get a good return, they get an appreciating asset, but they also get some awesome tax write-offs, especially with this 100% bonus depreciation. So we, as real estate professionals, have a huge advantage there, and it's definitely something people should consider. But yeah, anyway, Joe, it was a great person to talk to, and we are on this journey together to continue learning. If you're listening to this podcast, you are learning more and more. Hopefully every time you listen, you're learning something great. And just a friendly reminder to go ahead and subscribe on your favorite platform, give us a review, help us grow our audience, and share this great content with everybody. So without further ado, here is Joe Killinger. Welcome back to the REI Agent. I'm here with Joe Killinger. How are you, Joe?
Not too bad. How are you doing?
I can't complain today. Thanks so much for being on the show. I'm excited for this conversation we're going to have. Tell me a little bit about how you got into the wild and wonderful world of real estate.
I started off from the Midwest, and I grew up on a working farm, Wallback, Nebraska, town of 281 people.
Wow.
So dating pool was pretty shallow, as you can imagine. But my father got to be an auctioneer, and he started off doing your typical sale barn stuff, livestock, and then he got into machinery, and then he wanted to do real estate. And the real estate really was intriguing to me. And I just love the way, and this is mostly farmland, of course, back there, because this was central Nebraska. And so I really got into it. And then when it was time for me to go off to college, I decided to get my real estate license. And if you can imagine, I was 18. I looked like I was 12. And Wood Brothers Realty in Lincoln, Nebraska, I just went out there to interview, and one of the Pace Woods Jr. Said, okay, we can give it a try and see how it goes. And I just fell in love with the business, and I was really learning how to do farmland there and residential. I didn't like residential, but it was just interesting learning. The people were interesting and were so welcoming, and but I just love the way to put deals together. I ended up moving to Los Angeles. I ended up in the real estate auction business because it seemed familiar. Turns out it's completely different than the way I grew up, of course. And I just love the business, and I eventually gravitated to doing some residential, and then I'm like, well, this is definitely not for me. Mm-hmm. And I got into commercial real estate. So I do brokerage and I do investing as well. Matter of fact, we are just starting to raise a small fund to help some of our agents in our office invest. So,
oh, that's cool.
Yeah, it's fun. There's a new law that's been proposed that, that used to be, and don't hold me on this, was it 250,000 you had to have, or $1 million net worth, and 250. And then before you could invest, well, they're removing that. You just have to have experience in, or a knowledge base in real estate for you to invest. So I think that's going to really open up a lot of doors for a lot of people. And I just think real estate agents should invest. And so this is the way we get our agents are going to be able to invest right alongside of us. And so yeah, I just love the industry. I love seeing young people get into the industry and really grow their business. And that's what the joekillinger.co is really all about, is helping people get into the business, or that are in the business and have been struggling a bit, help them figure out their path.
I love it. Joe, I actually had not heard that they were changing that the $1 million net worth, or was it 250? It's
proposed.
Was that
it's
part
proposed.
of it?
It hasn't passed yet. Okay. So
not part of the beautiful bill. That's something separate.
I don't think so. I think it was something separate. Yeah.
Okay.
Yeah, it was, and I only know I heard it on the news, and I'm like, oh man, that's going to really open the door for our agents. And then our partner in our fund that we're raising is a real estate attorney. And he goes, there's nothing on this yet. And then he emailed yesterday, he goes, oh, it's proposed. It's not in stone yet. So you want to watch out for that.
Yeah, that's interesting. I actually heard maybe a year or so ago that they were thinking about, or people were expecting maybe that the limit to increase, because having $1 million net worth now is way different than it was.
Yeah, exactly.
So, the expectation was that the bar would be set higher, not decrease. But it does make sense that if you do have that experience, if you are, seasoned in the space that you're wanting to invest, that you should be able to.
Absolutely. If you've got the background and understand how to do the due diligence, then you should be able to. Lord knows, I mean, how much do you know about crypto and how much do you know about the stock market, and people are investing in that, So, and I think real estate, it's a better investment.
Yeah. I mean, doing a fund or doing a syndication is definitely something that I like to talk about in this podcast space, because I don't think a lot of agents know what those things are, and
Right.
I think to better understand that and better understand the power of being a real estate professional and taking advantage of these big commercial deals, or a fraction of them, by investing in a fund or a syndication, that you are able to greatly offset your taxable income. And especially now that this part, I believe, has been passed with the big beautiful bill of having the 100% bonus depreciation coming back. And I also, with that, I could see a trend of Airbnbs going up again because of the high income earners wanting to do that loophole of being able to 100% bonus depreciate that asset and offset their income, their earned income, not just their passive income. So it'll be interesting to see what that does in our markets.
Yeah, well, I just think it's going to open up a lot of doors because, and I think, as somebody that's really learning the business, if you invest, trust me, you learn a lot faster when it affects you.
Yeah.
It's your money that's on the line. Boy, do you listen a lot better. Yeah,
absolutely. And I one of the biggest reasons I invested in a syndication to begin with was because I wanted to learn more about it. And I was like, I need to put my money there. If I want to one day lead these, if I want to do these, I need to experience it on the other side. And it's been an amazing experience. I did have a question for you about the residential versus commercial space. Mm-hmm. And, I've definitely heard that a number of times, that there's just kind of like, I don't want to deal with residential. And then I think the residential people might be intimidated by the commercial. Can you maybe speak to that a little bit, break down what it is about the differences and maybe who would be better suited for both?
It depends. I see and I've had bad luck taking residential agents, converting them to commercial agents. They typically, you have to come from the investor mindset, where's the return at? And, as a commercial real estate agent, you're looking at, investor profile, understanding what your investor wants, understanding where you're going to get that return for them. Maybe it's not here, maybe it's in another state. You have to understand, each asset class. And if you're going to focus on, which I always tell them to focus on one asset class, which makes it a lot easier.
Sure.
But there's just a lot more to it. When I was doing residential, I learned homes on the west side of LA, and then the finishes. And what I hated about it the most was every time I did a deal, I had to go find a new client. Whereas in commercial real estate, if I get with a good investor that's buying properties, I can now build a business because they're going to be buying multiple properties every year, or if I get in retail, I do a lease or office, whatever it is, I'm going to renew that lease in the next few years again too, if I stay in touch with them and stay in touch with them. And so it's just a real opportunity to really build a bigger business there. But personalities, I think you just have to be, for both of them, you just have to be an entrepreneur.
Yeah.
I think there's these TV shows that are on are probably doing the business a disservice, because that's not the way it's really done.
Yeah.
It's not.
Yeah.
You're not going into a restaurant and talking on the speakerphone and negotiating a deal there that, you're not making those kind of decisions without contracts and otherwise there'd be a lot of lawsuits. But, it's, both of them are incredible businesses. It just depends on, commercial real estate is very analytical. You have to understand how local. Yeah. You have to really understand how to analyze properties, break them down, forecast. So it's just completely different. And I started doing residential and it just wasn't for me. But it's not that I didn't enjoy it, but I knew that I really wanted to build a bigger business. And I knew I could do that with commercial real estate. And that's why, so I have Commercial Brokers International in Los Angeles. We have 21 agents, and we also have an affiliate network that we do deals all around the country with.
Okay.
Yeah.
Cool. Well, I was going to say, is it maybe if you lean a little bit more on the analytical side versus the relational side, maybe
Right.
that's where you could think about if you're looking to get into real estate, which way you want to go. You have to have both. Like
Yeah, you do have to have both either way.
But if you're preferring to deal more with numbers and that kind of thing, maybe that's more commercial. If you're a very analytical type person, and if you want to deal more with people and emotions and anxiety and all that.
Oh, we still get that in commercial. Trust me.
I'm sure.
But yeah, no, it's just you pick your poison, and commercial real estate. Yes, it's more analytical, but you still have to be able to deal with the clients. You have to understand empathy and how to understand where they're coming from. Right. And it's going to help you win negotiations, of course, because you understand where they're coming from, why they feel the way they do, listening, and that's very much so the same as residential. But commercial for me is just, we find that those people are typically a little bit more analytical. And, in commercial, we're in the office most days, whereas I walk into a residential office right now, there's hardly anybody in the office. Yeah,
maybe basing decisions off of numbers versus making decisions based off of emotions is maybe also a very broad, not perfect way to say the two different worlds. But it is fascinating. I've done some commercial. Have not at that part. We're in a small town, so it's not like that we have an immense amount of commercial property and not a ton of leases to sign, that kind of thing. So that's residential's been my game.
Well, I think commercial, there's a huge opportunity for the younger generation right now because, the average age of a commercial real estate agent is between 55 and 62. And so a lot of people are aging out. Now, younger generation were born with these things in their hands, right?
Yeah.
If you can do digital marketing, you know how to write a blog, with AI, writing a blog, and AI is a tool, the way it can really help you put your analytics together, put your packages together. I think it's a huge opportunity for the younger generation to get into commercial real estate and take over a marketplace, because if your competition is 60 years old and they just cold call and live off referrals, and you go in and you're putting content out and you're writing blogs about it, you're out networking in that market, you can take over that market pretty quickly.
Yeah.
I think there's a huge opportunity. I mean, I look at getting started in commercial real estate, actually any real estate, it's a startup. And you have to have that mentality. You have to think, I'm going to open my door at 8:30 in the morning and I'm going to close it when I'm done, and get everything done. It's got to be, you got to focus on not just outbound leads like we've done in this business in commercial real estate forever. You got to focus on inbound leads now too, because the opportunity exists. Whereas, not with all firms, but you want to make sure if you're getting started, you find a firm that allow you to market yourself so you can get inbound leads coming in, because those are going to close. You're going to close a lot more of those. And so inbound and outbound leads, writing blogs, getting an email program going, having a great CRM, having that great tool for both residential and commercial, critical, because that CRM is your data. That's your base for your business.
Yeah. Yeah, really learning how to actually use it.
Yeah. You know what? That's the thing. You got to find one. And I was on Salesforce the other day. I'm like, good God, I'd never been on that one before. And it was so confusing to me.
Yeah.
But the person using it was whipping through it, and she has all these tools she knows how to use that just has increased her business significantly because she's using the right tools. And there's so many tools out there right now, and AI is growing. You're finding that there's just a lot more opportunity. And I mean, even with the robocalls right now, they're, 6 months ago, you could tell it was AI. Now, I mean, I just think where we're going to be with this in the next year, you're not going to be able to tell at all.
Yeah, it's pretty crazy.
Yeah, you can just sit at your desk and create your content where your system is dialing, and then when somebody answers, you just start talking. And so, yeah, it's really going to revolutionize commercial real estate.
Yeah.
which is due, by the way. I think we're well overdue.
I think the number one rule with CRMs is to have something that you use, actually use it. And it can be simple. Like I think that there's a lot of advantages of some of these fancy tech. I'm using one now that is very robust, and love playing around with automations and all the possibilities there. But at the end of the day, like if you're not actually reaching out to people, actually using it, it doesn't matter if it's a spreadsheet or if you use the fanciest Salesforce system.
Yeah, it is. You got to get in action. Action gets the deals. And I talk to so many people that have been struggling for a long time. And you sit down and you say, well, what are you doing? And they're cold calling about 60 calls a day. They're doing some networking. And I talk to them, I go, you're not doing an email program. You're not doing any kind of content creation. You're not writing blogs. You're not, they aren't doing any of that. And it's a shame because they have a great service. You can have the best service in the world, but if nobody knows about it, you don't have a business.
Right.
It's
totally true. Yeah.
Yeah. Yeah. Or if you've got the worst service in the world, but you're a great marketer, you still don't really have a business, but more people know about it.
We can probably both think of examples.
Yeah, for sure. Right. Yeah, no, it's important. I put on the joekillinger.co under Learn, I put together a booklet. It's all free, and it's your first 90 days in commercial real estate. And I just think it's important for people in our industry to understand that you just got to keep activity going. There's plenty to do. Actually, I put another booklet up on there because when we launched this commercial brokerage company, Commercial Brokers International, we went through I put down all the mistakes we made, which was plenty, because we didn't know. We were agents, and we decided to start our own company. And we made a lot of mistakes. I put that up there too. So those are all free. You can go on there. There's on the website, there's books that you can get that are all been suggested or recommended reading by other investors and agents. So it's all there, and it's all free. It's a platform for agents and investors to use. And there's documents too. If you need documents for sign-up sheets, for tenant walkthroughs, all that stuff is on the website. Just print it off there if you want.
Awesome. Well, thanks for that.
Yeah.
We'll definitely have that in the show notes as well. But I was curious if your thought on this. I mean, if let's say you are an agent that is wanting to get into multifamily, like wanting to invest in multifamily, does it make sense to niche down as a multifamily specialist? And how do you think you walk that line of wanting to buy some of the opportunities that come across your table?
Yeah, if you want to be a multifamily investor and you're a multifamily broker, you want to just focus on the asset class because you can create a lot of opportunities. Now, you have to be careful if you end up buying a property in your market and it doesn't get marketed property. The owner might come back at you and say, "Hey, you bought my property and you didn't market it very well, so I need to get more money out of you." And then you've got a problem. But understanding your market is really no different between a broker and an investor. You want to pick an area and know everything about that area and really be the best at it. So if you're a broker and you're multifamily and you're in Virginia somewhere and you say, I'm going to do multifamily, I want you to pick out an area a couple miles each way, and I want you to know everything about that area. I want you to know how many properties are on the market right now. What's the average days on market? What's the average list price? What's the average sale price? What's the average size of the building? Parking, all of it, know everything about it. And that plays through to the investors too. If you know all of that, a lot of your due diligence is done up front, and it can save you a lot of headaches because when I bought multifamily properties in Los Angeles and in Dallas, and a lot of the properties, 100% of the properties we bought in Texas were because the out-of-state owners were losing the properties. And because the property management companies were not, I had one that I'm sitting there, we're in escrow on it, and I'm sitting there with the manager, that's an on-site manager at the time, And she goes, are you going to keep me on? And I said, well, no, we can't. I said, what you're earning is double the industry in this market. And she goes, no, I'm not. And I showed her the numbers. She goes, well, I'm getting half of that. She goes, the property management company is keeping the rest. And so, and we kept digging, and we found out there was a handyman there that was working on another one of that property management companies, but living for free in that building. And they had a assistant manager living on that property at a discounted rent. So, yeah, wow. It was a mess. They were getting their ass handed to them. And so we kept the maintenance guy, but not at a discount. And he worked on our property only. The manager got the salary that she was getting. She stayed and got the salary that she was earning. And we didn't need the junior manager. For 70 some units, we didn't need all that staff. And then we just brought in another part-time maintenance guy. We cut all those expenses. So even when you become an investor, you want to get out there and really boots on the ground and know what you're doing, because people, I mean, we've got horror of properties that we've brokered where we started looking at the books with our investor, and there would be showing vacant units. But when you go out to the property, the unit is occupied, but the on-site manager was collecting the rent for herself. You know? Yeah. So
cash.
Yeah. Hey, I'll let you in here for cash. Matter of fact, a big discount. I know it's $1,200 a month. I'll give it to you for $900, but you just pay cash. And and then there was like 5 people living in there too. So,
oh man,
it's really being smart about your investment. It makes me leery when I hear people say passive investing. I just think I'm like, in real estate, you better be watching it.
You got to manage the managers if you have them in place, right?
Yeah. Yep.
Yeah, that's crazy. How are you seeing that multifamily market now? I know that we kind of went through a really rough spot. Are we through it? I mean, so if people are
I think that and again, this depends on the area. Now in Dallas, there's so much inventory coming on the market, and they're all stabilized. LA, it's pretty tough right now. There's not a lot of activity. People are thinking that there's going to be a bunch of foreclosures, which we've been hearing about now for 2 years, 3 years.
Right.
And that's not really happening. And honestly, the fires that we had out here filled a lot of the buildings up. So, that changed that in this market.
Wow.
But as far as Midwest, you're seeing multifamily starting to really pick up, because a lot of the inventory that looked like was being overbuilt is being absorbed. And so you're going to start seeing more development start to happen again the way it looked in certain markets. Some markets just have way too much inventory. But we're not actually in multifamily right now. We had a syndicator, and this is another thing to watch out for, a syndicator that came to us. And he goes, I love your portfolio you have here in Dallas. I'd like to buy it. It's in an area I want to be, and it wasn't for sale. And he goes, well, what do you want for it? We told him, and he goes, okay. Because we planned on demoing the building and adding more units, and rebuilding and adding more units, and then re-tenanting. But he wanted them, and it turns out he was a syndicator and the contractor. So he front-loaded everything, and I'm guessing all the work that he put in was pretty labor-intensive, so he got his money, and I'm sure it's back to the bank now, all the properties. So you got to really vet the people that you're investing with.
Yeah. There's a lot of people that were in hot waters, and people are doing capital calls and stuff. And the main reason is people didn't project the interest rates going this high, and they had short-term bridge debt that changed drastically, so their numbers didn't work anymore. And that's what I was referencing to when I said that going through a rough patch. But it's interesting to hear that you say that it's not really. You're not seeing them actually come into foreclosures. So
not many yet. There's some. I just asked for. So I have a Icon Capital Advisors. We have a commercial real estate mortgage company, and asked for a list of foreclosures the other day. Because there's not many, and for LA County, and there was less than 10 right now, and so that was shocking to me. That was for this month. But yeah.
Okay.
Yeah, I was surprised.
So then, what asset classes are you focused mostly on?
Triple net right now. So we were doing property management. We weren't planning on selling the properties, right? But when this guy came in with his offer, like, okay, well, I'm saving a ton of headache, and I'm getting the money that I want. I don't have to go through the development. So yeah, we'll sell. And then we're like, well, now what do we do? Because multifamily was too high in Texas at the time. And so we bought some triple net stuff. And that's really what our fund we're raising now is for triple nets and single tenant net lease deals.
Yeah, for those that aren't aware, it's kind of the holy grail of investing. You don't have to really take care of much when a triple net. You explain it better than I can.
Yeah, no, it's just I went from phone ringing all the time to I get an email once a month going your deposit's in. Yeah. And so, but it's again, you have to vet it out, know what you're doing. So, I really love the asset class, and that's what our fund is for. We're going to start buying stabilized triple net, and then our next fund will be more higher risk stuff with 3 years left on the lease, 4 years left on the lease, and then we'll re-tenant it with clients. My business partner and the CEO of our commercial brokerage company, George Pino, he does nothing but triple net deals around the country. I think he's done them in 39 states. Mm-hmm. And so I think there's a big opportunity for us there. And, a lot of people don't realize that the triple net deals are, they're the most liquid asset as far as real estate goes, because you can put it on the market, price it right, and it'll sell pretty quickly. That
makes sense. I mean, it is very, it can be very stable. If you do have like a 10-year, 20-year lease on it. And again, they're taking care of maintenance and taxes and insurance and all that, right?
Yep. Yeah. We still stop in. I still stop in and check on the properties. And, I was at the one of the Jack in the Boxes that we own in Allen, Texas, which Allen, Texas is one of the fastest growing cities in the nation. And the bathroom was dirty. So I called the owner and said, hey, your bathroom's dirty. And he goes, I've never had a owner of a property stop in before. He goes, this is new for us. And so I went and met the manager. And she said, I'm on it. And I've been back in there several times since. Spotless.
Nice.
Spotless. Yeah. And so even with the triple net deals, we stop in. It just doesn't, it's the money. But again, it's the due diligence. You want to be on a signalized intersection if possible, or at least you want to be on an intersection. You want to make sure there's a great traffic count, great walk score. What's your competition look like in the area? Are there any churches, schools, or synagogues, whatever it is, in the area? And, you got to do your due diligence and buy it right.
Mm-hmm. Would you say, how are the cap rates compared to multifamily typically on those kind of deals? Do you see the more work with the multifamily asset class having a higher return, or is it about the same?
Higher return because, you get the turnover in the multifamily. Every year you can tick it up a little bit.
Sure.
It'll drive it up a little bit faster. But the less work for the single tenant net lease, and I'll take that all day, every day. I mean, you still get your bumps every year, but just typically not like in multifamily.
Yeah.
But I love both assets.
Right? I mean, you bake in the rent increases into the lease upon initial signing.
Yep.
Yeah, you could really think about, I don't know. I've heard it described as like a real estate investing pyramid. Like if you're looking at, forming a base with maybe strongest cash flow or something like that, and then kind of moving up the pyramid. And also, if you are looking to have more freedom, to be more passive, right? That might be the perfect solution to work towards.
Yeah, that's what we're going to do with our funds, or just build like you said, a pyramid, and we're going to have the base that's going to be the low risk. I mean, obviously there's still risk, but lower risk. And then the next one will be higher risk, and then maybe the next one will be higher risk. I mean, we had one Del Taco out in Inland Empire we've owned 3 times, and our tenant wanted some money once, so we sold it. And then as it was a couple years later and the lease was getting close, I think there's 3 years left on it. We bought it back, renegotiated the lease with Del Taco. They remodeled the property. We flipped out of it. Just kept going, kept coming back.
Wow.
And it was quite a deal. And but it's a great asset class. We know what we're doing. We've got a Chase Bank right now that is dark, meaning that the Chase Bank closed down. It closed down about 2 months after we bought it, and we knew it was coming. But there were 7 years left on the lease at the time, and that was a couple years ago. And we're going to re-tenant it with either a new hamburger chain or chicken chain, or a gas station wants it. So either way, I can take it and we'll get a buyout from the landlord, current landlord or tenant, and we'll take that money to redo the property and have a brand new lease with a brand new property on it.
Wow.
And higher rent. Yeah.
Yeah, that's great. What would be the risks of triple net lease investing?
Rite Aid's a prime example right now. They're closing down across the board. There's always that the business ends up closing down, and or the area, something happens in the area. We're here in Los Angeles, and the smash and grabs were, they were getting hit pretty hard. And so we had another pharmaceutical company end up closing down. They just couldn't keep the doors open. So you really got to make sure that you're looking at, what's going on in the area. They've got that turned around now. That was just at the peak of everything that was going on. But you've got to really know what's happening and understand the tenant, understand the client and their financials. Because if you're going to buy a triple net deal and you're buying with a franchisee that has 3 properties only, that's pretty high risk. You want to have 100, you don't want them to own 100 properties or more, or the franchisor owns it. And you can get a personal guarantee, that kind of stuff. Very, very powerful. I mean, when you get with a national tenant that gives a personal guarantee, the cap rate is, not that great, but there is a ton of security there.
Yeah. And I would imagine the depreciation is the same.
Yeah.
So that's a benefit as well. Yeah, that's fascinating. It's definitely something I have not invested in yet, but something I would definitely.
It's a little more expensive to get into, but and again, you've got to know what you're buying. We had one client that wanted this in the middle of nowhere, Wyoming, wanted this kind of off-brand tire company, and it was kind of like the Econo Lubin tube. And we're like, why do you want that? He goes, the cap rate. I just love that property. I love that area. He goes, I know it's going to be booming. And he was right. Everything built up around that property. I think he still owns it. And that was like 10 years ago.
Wow.
Yeah. Made a killing on that little property.
Yeah. That's
but
awesome.
He knew the area, so.
Yeah, it definitely helps. And yeah, I think you say it's more expensive and everything, but that's again, kind of where I'm talking about like the investment pyramid where you kind of, are able to get into the higher asset classes as you go. But, starting off maybe in the startup phase, like we talked about with sales, right? I mean, you're grinding, you're, maybe doing BRRRR deals where you're flipping a house and keeping it as a rental to make the numbers work better. Maybe you're making that also into an Airbnb, which is also more labor intensive, but then can overcome the higher interest rates so that you can actually get some cash flow on it. Yeah. And then over time you start getting equity and you maybe want to roll that equity into something a little bit more sophisticated, a little more expensive, like that kind of deal or something a tier below that. And you kind of keep working your way up.
Absolutely. You want to, when I was interviewing a guy and he had, I think 30 Airbnbs around, I want to say Illinois and Idaho. And I'm like, what's the plan when everything slows down? This is right during COVID. And he goes, well, I'll keep them. I'm like, yeah, but if you're not keeping these homes filled out, because he was taking one, leveraging it, buying another, leveraging it, buying another. Yeah. You got to be smart about how you do it. And they were just blowing and going. And it's just like the investors just saw all over Twitter during COVID with, the 2-3% interest rates and posting about how they bought yet another 200 units or 300 units. And, they're doing this every few weeks. And, with Icon Capital, we got to see some of these guys' numbers because they were looking for a loan. And I'm like, when interest rates go up, this isn't going to work.
Yeah.
But, you got to start thinking about long-term, because if you have to refi, which you will in commercial, it's going to be, you've got to refi and you got to put those numbers in there. So, but banks have been extending a lot of that stuff to make it work because they don't want it back on the books.
Yeah. Yeah. The Airbnbs as well have been, the people were often using numbers before there was that boom. So we're analyzing based on this much occupancy, but now there's 100% more Airbnbs in the area. So like the occupancy numbers aren't going to be near as good.
Right.
So I was nervous about that market. We have a local resort, seeing if we see a flood of failed Airbnbs come. But yeah, so far it hasn't happened. And this whole 100% bonus depreciation may increase the interest in buying them. However, that doesn't really solve the problem of high interest rates and maybe way less bookings, or the numbers not being as good. And people also didn't travel internationally when it was COVID as much. And so like they were wanting to go to a private Airbnb kind of thing, seemed better than a hotel. And so it's definitely a shifting market. And I think, it was, at least they would have it locked in on a 30-year mortgage, probably, right? That would be a benefit of that low interest rate time. But could definitely be having some people in hot waters because of those elements.
Yeah, it's anything with real estate. You always got to be thinking, how can you make money? When we were investing in multifamily, we would buy a property and we would do things like an accent wall. So you'd have 5 different paint colors that they could pick from, and have like above if it was a fireplace, they had that wall, they'd want to have a different color, a custom color in their apartment. You charge $15 a month extra for that. It takes you an hour to paint it, $15 a month while they're there. That was a pretty good return. Carports we put in were a very good return because we were buying 400 unit properties and they didn't have any carports. We put like a third of the number of units, we would put up carports for them, and then we charge extra for the carports. Mm-hmm. And in Texas, that can, when it was that hot or snowing, very little snow, but occasionally it did, people wanted it. So that wasn't an extra, because if we could build those things for so cheap and rent them out and added a lot of value to the property, you always have to be looking for ways to add value.
Yeah, absolutely. Especially in the commercial game. I mean, that's if you look at how cap rates, the magic of cap rates, and that operating expense lower and the profits higher, it's pretty powerful. And that's how the syndications and the funds work, right? I mean, that's why it's such a great win-win and such an awesome opportunity you're providing your agents. That's really cool.
It's fun. It's just, I love to see, I always wish somebody did that for me, because getting started was so difficult. And, I bought my first property and I thought I overpaid for it. But fortunately, here in Southern California, we get a good amount of appreciation. And we owned that property for 10 years and bought it for $275, sold it for just over $2 million. We were in an area that was up and coming.
Sure.
And in that 10 years, it really took off. But then our second property was a 3-story walk-up in Koreatown with no elevator. So there's a lesson for everybody. Don't buy a 3-story walk-up because nobody wants to haul groceries up those steps.
Yeah.
That was hard to keep the building was beautiful, but nobody wanted to carry groceries up 3 flights of stairs. So that was that. We got out of that when we broke even, but that was, I think our ego got a little big because we did so well on the first one. The second one about got our ass handed to us.
It's almost harder to have the grand slam at the first at bat.
Yep, it is. I was like, Jesus. We were lucky. We got out.
Yeah, I did pretty well with the first flip I did. And, kind of had that in the back of my head. It's like, okay, you can't get too ahead of yourself now. You can't get the ego going that, you're going to print money no matter what you do. But well, that's awesome. I'm curious if you have any golden nuggets you'd want to share with the listeners that, could be about commercial real estate, could be getting started in commercial real estate and real estate in general, investing, sales, anything that comes in.
I think, if you're getting into real estate, you need to come with the entrepreneurial attitude. What you're seeing on TV is not the reality of it. You've got to come in and put the time and effort and never stop learning. It's a great business, both residential and commercial. I love commercial the most, but residential, I had fun in it. And, you've got to just come with the right mindset. And it's a business that you can really build for a great career and have a great career path and a great family life too. You can do it right. And there's so few industries that will allow you to make this kind of money so early on in your career. I mean, I've got one agent started last September. He's done 4 deals already. And so they're not big deals, but it's more than he was making and selling, doing retail. But he's doing everything that we're telling him to do. He's doing the cold calls. He's doing the content creation. He's writing the blogs. He's doing the show. He's doing the block program, which he's a retail agent. He's doing everything, and then never stop learning. And you know what the biggest thing? Never stop listening. You know, as real estate, we're all salespeople, right? So we want to talk. So we say something, and then somebody will start talking, and we start talking over them. If you listen and then respond, your hit rate's going to go up a lot higher, a lot faster.
Yeah, that can be such a good sales tactic as well, to listen more than you're just talking.
Yeah. Yeah, my dad always said, he goes, Joe, he goes, just shut up. He goes, you got 2 ears and 1 mouth. Keep that in mind, buddy. Yes, Dad.
With the theme of learning, I'm curious if you have any favorite books currently, or ones that you think are just fundamental that everybody should read, if they haven't yet.
Yeah, I interviewed Chris Voss. He was the FBI lead hostage negotiator. And he wrote a book, Don't Split the Difference. And I think every salesperson should read that, because it's all about negotiations and how empathy plays into it, and listening. And it's just the whole gamut of it. And he's really great on YouTube as well. So, but yeah, and actually the book is up it's under recommended reading in my website under joekillinger.co. You can go in and get the book there. It's a great read. It's not that thick. He even has a TV show coming out now, so he's really on a roll.
Nice.
Yeah, check out Don't Split the Difference.
I think he also maybe did a masterclass. I think that's a subscription you can get where he can kind of go over the strategies as well in video format, if that's of interest. Yeah, that's great. Yep. And then I guess you mentioned your website a couple of times. Is there anything else you want to plug, social media or anything like that?
Oh, no, you can follow me on Instagram under Joe Killinger, LinkedIn, Joe Killinger, Twitter, Joe Killinger. It's pretty easy to find. Yeah, please give me a follow. We're posting content about, how to grow your business in real estate every day. And the YouTube channel under my name, we put out a video every Monday. We didn't this Monday because I'm working on something special for next week. But it's under Joe Killinger. You can go in and find it. And it's all about how to grow your real estate business for residential and commercial real estate agents. So, yeah.
Oh, perfect. Joe, thank you so much for doing that for the industry. And thanks so much for being on the show.
I appreciate you having me on. Very much appreciate it.
Thanks for listening to the REI Agent.
If you enjoyed this episode, hit subscribe to catch new shows every week.
Visit reiagent.com for more content.
Until next time, keep building the life you want.
All content in the show is not investment advice or mental health therapy. It is intended for entertainment purposes only.